Before I talk about some of the macro, I know you released your earnings a couple of weeks ago. Things are looking up. Tell us where the positive momentum is coming from.
Things are looking up indeed. This Q1 is a pivotal quarter for us. We've been in a very important turnaround, big transformation of the company for a year and a half now, and we're seeing all our efforts paying off. So now we're running the company with much leaner setup, much lower losses, although there's still some forex impact, but it's short term. And we're growing again in very significant ways on usage KPIs. So it's extremely important for us. It's validating the whole strategy that we've implemented.
Okay, so it looks like you had 18 months of cleaning up, restructuring, reducing costs, and now you're focused on the growth opportunities. Where are those growth opportunities going to come from?
So Africa, as a continent, I believe is the last place on Earth with massive untapped demand.
Yeah.
We see the whole world being a bit saturated on the demand side. And in Africa, I think it's a market that's poorly understood, but there are hundreds of millions of consumers who are poorly served, very poorly, because of inefficient supply chains, lack of supply, bad logistics, you name it. It's a long list. And that's our job to fix it. And we're seeing a lot of demand. We're seeing demand growing extremely fast at the pace of population growth, pretty much. And there needs to be players who can serve it. That's what we're doing. That's what we're focusing on.
Let me ask you, is your strategy about bringing on new customers, or is it about getting more out of existing customers?
I think it's definitely both. We're running the company right now with about 2 million customers on a quarterly basis, which is extremely small at the scale of Africa. So we need a lot more customers. We're targeting to get a lot more customers from sheer value proposition that we're delivering. And of course, we want to expand what we're selling to consumers so we get a bigger share of wallet.
How does the macro situation play into your business? I mean, you talk about, increased cost of living, high inflation, an uptick in unemployment. How does that impact?
The last 2 years have been tough. There's no way around that. I mean, tough for business, tough for populations. It's impacted both supply and demand, and as a marketplace, we're in between. So it's not very helpful. However, I think we've built a business model that's extremely resilient to tough macro environment. Africa is our playground. We get used to it and we embed it in the way we run the business.
Is there a risk of expanding too fast, too quickly within the African continent?
So we're already operating 11 countries.
Yeah, and is it living up to your expectations?
Yeah. I mean, with different levels, of course. I mean, not some countries have different macro challenges than others, but we're happy with the scope that we have. We're not expanding right now, and we believe there's a lot more we can get from those countries, particularly big markets like Nigeria.
Yeah. How big is the Starlink business?
It's meaningful. It's not our biggest business, but it's meaningful. Most importantly for me, it's a very relevant addition to our value proposition to consumers. And it's a great example of what we can do with international brands.
Can you give us an idea of how many Starlink units you're expecting on
I cannot disclose numbers, but we're very happy with the numbers. I believe they are, and it's very relevant for consumers.
Yeah. So let me just ask you then, we can't get a lot of detail about Starlink, but what are the fastest moving products on the site?
Oh, that's pretty standard. You get shoes, fashion, clothing, appliances, TVs, smartphones, well, anything that a marketplace would sell anywhere in the world. The specificity of our market is that we're really embracing the entry-level middle class. That's where the bulk of demand is. So we're really focusing on affordable segments, affordable products.
Yeah.
So a lot of the brands that we're selling are not known in the US, for example. But that's the way we adapt to the purchasing power of our highly price-conscious customers.
When I think of the Amazon model, which is, of course, the template for e-commerce platforms, margins were very low. And especially in the e-commerce business, it's a low-margin business, but it's a margin of scale. Is that the philosophy that you have for your own platform as well? Build up the scale, even if it's at low margins, and then start introducing the other high-margin products, which is what Amazon did essentially.
The philosophy in our business is, there's no such thing as another Amazon, right? It's a model, but we're not exactly Amazon. The philosophy in our business is that we need to build scale, of course. We know that customers are heavily price-conscious, so we need a very lean structure on our end. So we can deliver very low prices on everything, including delivery and all services. So we're really focusing on getting a very lean organization, very low costs. We divided marketing budgets by 3 last year. We're further reducing it, and we're focusing everything on an amazing value proposition to consumers. That's the mindset. That's what we're building, and I think it's a bit unique and definitely tailored to Africa.
Yeah. Let me ask you, what the vision is for the company in 5 years' time? What does Jumia look like?
Oh, it's going to be a whole different.
Why?
I mean, the scale of the opportunity, the scale of the market is absolutely massive. Population in Africa will nearly double in 30 years. So we're looking at something that's unprecedented in the history of the world in terms of consumer demand. And Jumia, I mean, we are building the right fundamentals so we can tap that growth, so we can be the one company that's positioned to tap it. So this company is going to be a lot bigger. Scale is going to get us to profitability, obviously, and it's going to be completely different.